Williams, the FDIC has a long history of working with banks, including mission-driven institutions, to develop policies that support broader access to the financial system. Late last year, your agency announced efforts to develop a revolutionary mission-driven bank fund to create a streamlined pathway for private sector and philanthropic investment in FDIC-insured MDIs and CDFIs. This novel approach has the potential to affect positively millions of folks. Can you provide us with a brief update on the Mission-Driven Bank Fund and other recent economic inclusion developments at your agency?
Thank you, Senator, and thank you for calling it revolutionary, because I sometimes feel that's literally what it took to get it set up at the FDIC after I watched an episode of Shark Tank on a plane and thought, why don't we have a Shark Tank for minority banks? And that's how the idea about this mission-driven fund really was born. We had to search statutory authorities to make sure that we stay within our preserve and promote mandate for MDIs and CDFIs, and this mission-driven bank fund is in the process of being set up. We have a fund advisor. We're going to be able to actually commence the opening of the fund before the year end. We have close to $200 million in private commitments, and I will be restless advocating for investments in this fund through the rest of my tenure, because frankly, it may be one of the most significant things we have done for minority banks, especially for African-American banks that have the lack access to capital, and this is going to be huge to move the needle for those banks. I can also tell you that I have taken the issue of minority depository institutions very seriously. We increased representation of minority banks on our Community Bank Advisory Council. We created an MDI subcommittee so that they can share best practices. We have created, I call it speed dating for MDIs and non-MDIs, to basically highlight the benefit of teaming up with an MDI. We clarified that investments in MDIs for non-MDIs result in CRA credit. We have created a marketing campaign to promote the nature and the scope of minority banks in the United States, and I can assure you that until the day I'm in this chair, I will focus on this as one of my main issues at the FDIC.
Well, you have done a really good job of making sure that, A, we stay in consistent communication about the important issues around MDIs, CDFIs, to make sure that there's greater access for folks who are credit worthy to find a path forward. And it's one of the things that we can do better, and you have frankly been a champion of doing it better, which is to find ways from a credit worthy perspective to pull resources to create access to small business. Entrepreneurs like myself depend on that access, and you're doing it in the most effective way possible, and I really appreciate that approach. For all three of y'all on the panel, it was a couple of years ago when I led the Republican Banking Committee colleagues on a letter encouraging regulatory harmonization and coordination from the CFPB, OCC, Fed, FDIC, and NCUA to create a consistent small dollar lending framework across all institutions in order to promote and expand small dollar lending and credit options. That's why I'm especially excited today by your agency's issuance of joint small dollar lending principles last year. Is there an update to that approach, and can I get more information about what you all are doing on the very important issue of small dollar lending for folks throughout the nation?
I'll start there. First of all, within the NCUA, we allow federal credit unions to make what we call payday alternative loans. These are low dollar loans up to $2,000, up to 1 year to pay it back, generally done at no higher than 28% interest rate, plus up to a fee of up to $20 in it. What we have found is that these loans are performing generally well. I believe that the delinquencies in the last quarter were approximately 2.6%, and that the charge-offs were in the neighborhood of about 5% overall on these loans. For us, these small dollar loans are often a gateway in order to get people into the financial system. And I'll also make one other observation. When the crisis first hit, we saw many credit unions step up and do 0% small dollar loans for 90 days, then rising up to perhaps 5% because they were so focused on serving their members.
Excellent. Thank you. Mr. Hu?
Yeah, I think so the issue is extremely important for us. Under Project REACH, which I believe you had a role in sponsoring,
yes.
a couple of work streams there which really hit on this. So the first is on credit invisibles, 45 million people who don't have a credit score.
Yep.
That work stream has really taken off. And so there are both banks, community groups, civil rights groups have gotten together and really worked to figure out what are the alternative data sources that can bring them into the mainstream financial system. So that's been a huge effort. The other is on MDIs and on small businesses. Those are two other work streams. So on MDIs, 23 banks have signed the MDI pledge, $500 million technical assistance partnerships, and on small businesses, consortium lending, other efforts to basically make these dollars available.
Thank you.
Oh, if we have the time, I would be happy to tell you that we have focused.
I'm not sure that I do, but we'll keep talking until Chairman Brown says stop.
Thank you. I'll speak very fast. We have focused. This has been one of the focuses. Or foci, I should say, when I joined the FDIC, because frankly, we had a disjointed agency approach. The Fed had supervisory letters, OCC had a bulletin from 2018, FDIC had a rule from 2015, and then there was the CFPB rule. And when you have so much uncertainty in the regulatory framework, you know what the regulated entities do? They don't do it. And so it was important for us to hold our hands together and be willing to sit at the table and come up with a joint process to issue this guidance, which frankly, I'm so grateful was commenced back in 2018 when I joined the FDIC, because by 2020 we were able to issue that guidance and encourage small business, small dollar lending, and the pandemic was upon us. So thank you for your support of this.
Absolutely. I'll just finish with this, Mr. Chairman, the fact that Mr. Sue was alluding to the fact that there's a way to find those who are credit invisible and bring them to light. And one of the things I want to note is that oftentimes those who are credit invisible may be credit worthy. So the question really isn't a question about whether or not they deserve access to the opportunity to be banked and have access to the loans. The question is, can we, through the breadcrumbs in their portfolio, find the rent payments and the other things that would tell us that they will be have a high success rate as it relates to helping those who are credit worthy become credit visible. And in South Carolina, that's I think the number was around 17 to 20% of the folks in my state find themselves credit invisible. So thank you for your work.
Thank you, Senator Scott. I will take Mr. Sue's head nodding as his answer, if that's okay with you. Senator Smith is right.
I'd like another 3 minutes, sir.
Yeah, you would.